Before the ASX cash market ever opens, the Australian market already has a price. That price comes from the futures market. And it isn't always right. The AUS 200-day futures prior day column measures the net futures move from the global futures close to the ASX cash close on the prior trading day. This is important because this column captures the price the ASX inherited, not what the cash market ultimately accepted. There's a key distinction to understand here. The difference between the AUS 200-day futures, prior day, and the AUS 200 ASX session range, prior day, is the AUS 200 open gap, net. Futures set the inherited price. The cash session determines what happens after the open. If futures trade higher overnight, the market is expecting the ASX to open and trade higher. That expectation is already embedded in the price before a single physical share trades. What this column really tells you is whether that inherited pricing persisted, was challenged, or was corrected once the cash market took over. If the ASX cash session later trades sharply against that inherited futures move, the repricing didn't start overnight. It happened during cash hours. This is not a pure ASX session measure. It doesn't tell you where the market settled. It tells you what price the day began with. In Mosaic, this column becomes most powerful. When you compare it with the prior day's close, the overnight futures dislocation, and the first 15 minutes and first hour of cash trading. Markets don't start fresh at the open. The AUS 200-day futures, prior day column, shows you the expectations the cash market inherited.